everybody. Hi, Patrick. How are my trading warrior brothers and sisters doing this morning? Everyone doing okay? So yen crosses were a home run ball. Just want to show my screen here. I have a couple of looks to share. Everyone doing all right? You could have been short any yen cross and cleaned up. You know, my preferred short was the guppy. Continues to work. I want to start off with a look that, how are you, Reef, that Blake tweeted yesterday, showing that this could have been a false breakout in the Nikkei. And so when I go to today's action, you could see we're right on the verge of making this a false breakout right here. Right? Just put it right here. So potential false breakout there. Nice call by Blake Morrow. Also, I want to show a look from Hardianto. Hardianto went long CAD. I believe Blake is long now. He's looking to do it around 90. Hardianto is an excellent trader, calling this a potential ABC here. We have held this 560 level. I think that was also Steve Volge's area. Great look, Hardianto. Everyone thank Hardianto for this look. Okay, and then I also want to talk about another great call by Blake in Euro Pound. So we have failed against the 86 level. If you look at the 1 hour, really put in a nice divergent reversal candle up here, right here. My belief is that the highs are in for a while for at least a break to 85, maybe 84.80, which would make this, the euro, the preferred short while this is correcting or peaking. Not sure if it's going to be the big break or at least just a correction back down towards its 85 level. Give me a Y if you guys are with me on my analysis so far. Okay. So just quickly, we're getting a slam in S&Ps. We never got that third drive to a top. I thought that could happen. I don't think so now. I think the correction's underway. Pretty close, but no cigar. I thought we'd go 24.15. To me, it looks like it's over. So risk off is going to be a big part of what's going on here today. Also, I want to show Pound Aussie, which was a great short last week that was covered Friday. I now think that we will make the move up towards new highs, maybe up towards 77, 78. So I thought initially we'd only rally back to 75, but we're cutting through this. So again, with Euro Pound looking like it's going to correct, the pound's going to have the relative strength. Aussie's going to be weak during this sell-off. So Pound Aussie looks like it has a real chance to move up towards 177. Give me a Y if you're, hello, Right Chew. How are you, Jess? How's it going? So if I was looking for a scalp now and looking to fade the dollar, starting for the first time to have a little bit of a reason here in Euro for the first time on the 1 hour. See this? See this? I think you could short the euro right here with about a 60 pip stop, looking for a pullback towards this level, 1040. So this may only be the second drive, but this is the first non-confirmation. Give me Y if you see the divergence. It's the first one all the way up. First high not confirmed right here at about a 70 reading. So if you're looking for scalps here, my preferred short, because Euro Pound looks like it's going to correct, is going to be Euro USD. We have a great interview today. Greg Michalowski is going to be with us. Who out there loves Greg and his work? So I haven't talked to Greg in a long time. Looking forward to our conversation. Everyone loves Greg. Hardiano's a big fan. All right, so he's going to be with us. So those are my calls. The next one's yours. We have some time if you guys want to share some looks. I don't think I would chase any of the yen crosses here. Even the strength, which was euro yen, is getting hammered. Okay. Up here, it didn't give me a divergence, but it was a great short. I was negative in here. There was one more push up, and this momentum kept me out of it. But it did. My preferred short was in the guppy, which was not a bad trade either. Selling the rally up towards 47, and the commodity currency crosses are really getting hammered. Aussie yen, I don't think we're going to get up to that 85.80 level. And the Dixie, we're at that number, right? 97.70, I believe, was Nick's number. I am starting to get a little bit of divergence here. So I definitely wouldn't be short the dollar in here today. Yeah, nice shot there, Dan. You took it. You took half. Okay, thank you, Hans. Nice trade, Dan. Okay, here's a look from Luca. So if you guys want to share some views today, we can make it face day. And we could get some of your views. I know we have many guys in here that they're pros. Looks like the bonds. Okay, so Luca's looking for if we get below this. Oh, this is a Dow. We could go to 2037. Nice look on the 4-hour Dow chart by Luca. Everyone thank him. I agree with it. Thank you, Luca. Any other looks from the community? Steve Volge got short platinum yesterday. I don't know what you're doing with it. Midas. I know you were looking to short. You were short a while ago. Jess. Still short palladium. Yeah, that's what it was. Palladium, not platinum. Palladium. Any other looks from the community? You guys have gotten out of the habit of sharing charts. I know because we're too busy. We're too busy sharing our analysis with the team, so you guys don't get as much of an opportunity to do so. Here we go. Here's something from Kimster. It's the pound Aussie. So if you're new to social trading, you may think that this is a waste of time, but it's really not a waste of time because we have so many professional traders that come here for their intelligence gathering every day. And I've seen a lot of these guys trade for years. And I could walk in. Okay, so here's the resistance here. Yeah, 75 could be at 1.618. That's a nice look there intraday. I like it, Kimster. Okay, here's something from Jess. Okay, Jack. Like Jess is a pro. Arianto's a pro. This is not a hobby for these guys. This is how they put food on the table for their families. It's not just an avocation. It's their livelihood. Thank you. Very nice look. Could be a shot up here in pound Aussie. I don't want to short the pound while EG is going while EG is going down. So let me get Jess's. This gold, Jess. Hold on, Haryanto. Okay, here's Jess's look on the gold. I think this is Jess's look. Is it, buddy? Yeah. So here's his supply zone right here at 1256. So are you saying, Jess, this could be a short in the gold up here? Is that your view? Okay. So Jess does great supply-demand work. You always look left when you look at Jess's work. Here we are into a supply zone, almost there, plus confluence of a downtrend coming in around 1260-ish. Thank you, Jess.
Hey, Dale. Good morning.
Yeah, hi, Steve.
How have you been?
I'm good. How about you? You got your power back?
I've had a very weird adventure actually, but things are mostly under control now. Yes.
Okay. So I'm giving the community a chance to strut their stuff here, and
that's actually great. That's actually great. I mean, you know, we want them to share stuff as well.
We've had some great looks.
Yeah.
Let me just show Haryanto, and then I want to see what Steve Volge is doing. I'm curious if you covered your Canada short.
If I'll tell you all about my positions because
okay.
we have.
So, okay, here's Haryanto in the Kiwi yen. So I remember we were talking about this up here. This was a nice failing rally. I talked about it the other day, and look at its targets are under the 75 handle. So well underway. I don't know if I would chase it down here, but I concur with you, Haryanto, on your target. Let me just show two more. Here's Luca. Luca on the bond, on the bunds. And Armand, I have to thank for the pound Aussie short last week. He's the one that led my eye to it. Probably wouldn't have even thought about it if Armand hadn't taken the time to drop in the room and say, Dale, this is your favorite formation. It's a 3 drive and pound Aussie. Okay, with this, Luca is the ECB long trade. All right, so you're looking for one more rally here in the bund. Luca's excellent. Don't fade Luca. And then I just want to see an update from Armand on the pound Aussie. And then I'm going to turn it over to Steve Volge, who I learn from every day. Every day I learn from Steve. Every day I learn from Blake. Every day I learn from Nick and Grega. All right, let me copy this. Because I'm curious. I'm thinking Armand thinks it's a sale here. Yeah, I learned from Stelios. Thank you for reminding me.
Thank you.
A little bit louder, please.
What's that?
I said that Stelios was very quiet. I mean, I barely heard him.
Well, someone in the community asked me if I learned from Stelios, and of course I do. All right, so Armand agrees with that call. He's not looking for a new high. So we've had two members in the community. I forgot who else sent us this pound Aussie look. but it also showed resistance up here at 75 and then looking for 72. And Armand agrees with you. So this could be a good shot, you know, maybe manage it with stops over 76, you know, risk 100 for the possibility for 250. And the way Armand has it would be just like an ABC back to a major trend line. Great look, Armand. Okay, Jess agrees too. All right, so that could be a good trade for you guys to consider today. But remember, manage your risk. Where are your stops on this pound Aussie bears? Where are you wrong on the trade? Let's help the community out with this. Where are you wrong? Over the highs? 50 pips above the high today? That's a very manageable risk with a beast like pound Aussie. Thank you, Armand. I forgot who else showed it. That's a Kimster. Line in the sand. Is this the pound Aussie Kimster? Oh, okay. Yeah, that's what I want to ask Steve about, because this is the area Steve thought we'd pull back to in the end, and that he was going to be considering being a buyer here. So
that is very, very true. That is what I said, I mean.
Yeah. I want to see if you change your mind, because actually that downtrend line that it broke out of, I have it back underneath it. But that's a nice look at the end here, right into this major support level. We'll see if they could turn it. I don't think they turn. I don't think they turn it today.
I'll tell you and show you all about it, actually, because I've had two new positions that were triggered. One yesterday, you remember, I even wrote it in our
the Palladium.
Yes, exactly. I went.
Are you at all amazed how I remember everyone's trades?
I am. I have to be honest. I am. I've told you before.
You know, how do I remember this?
You have an elephant's memory.
And then when I drive around in my neighborhood, I get lost. But when it comes to trades, I can remember what you did a month ago.
Yeah, exactly.
Take it over, bro.
Okay.
All right. Hey, Face, thank you very much for all those looks. Thank you, Kimster and Armand and Jess and Luca, all you pros out there. Thank you for bringing some great ideas to the table today. Okay, Steve.
Okay, I would have made that a pip yesterday, but we don't cover Palladium in ForexAnalytix. It's obvious that you cannot cover 45 tickers that I'm monitoring roughly. I mean, it would
Never been to the London Palladium? A lot of great rock shows happen there.
So,
go ahead.
I'm since yesterday from 794 and some change.
Yeah.
And I was in the money. It pulled back exactly to my entry. Today it seems to be following through. The reason you can see here, I'm monitoring two trend lines. One of them was this, as a support, I mean two trend lines. One of them is this intermittent one, which we broke yesterday. And I liked the way that we rebounded and then seemed like we were failing. That's why I went short, because I wanted, you know, to see some more price action, because the day before yesterday we closed right on top of it.
Okay.
So now I'm officially short.
We have a comment from the community about the liquidity in Palladium. Are the spreads wide? Is there a...
Listen,
yeah.
I know it's going to sound stupid to many, but I'll explain what the reason is. I don't really care about spreads. The reason I don't, and the reason you should, you know, depending on how you trade, is the fact that I'm not a short-term trader. I mean, right. If I was going in a market to make an incremental, to ride an incremental move and take profits or take losses after a very small move, that would be a very, very important element in my trading. But it isn't, because there is a chance, it has happened in the past, let's say things move favorably, that I entered short at 795 and I ride it to 627.
Let me ask you this though, Steve, do you price your orders in a market like this? You don't go to the market, do you?
I usually do, actually.
Okay, yeah, I'm like that too, you know. I've had an expression, I don't know if you agree with it or not, but especially if you're there at the platform, I say this: limit orders, limit success. I don't need the additional anxiety to know whether or not I'm going to be filled on an entry or out on an exit. You know,
level, exactly the same. For the fund, I work for the things are completely different. We're going to call the banks. They're going to give us pricing. We're going to get the best one. Because we work with 3 different banks, and that's how it's going to be. Because that's how the bosses.
Yeah, I mean, if you really believe in the trade, what's 3 pips, 5 pips?
Yeah, I'll tell you personally, even for the fund, I don't believe in this practice, and I'll explain why. I've seen cases that until we communicate through the Bloomberg terminal with 3 different banks and get quotes and everything else, the market has already moved more than a lot more than you would gain by trying to find the best pricing. You know what I mean? Yeah.
I've seen it live. Examples of people being unable. They're right in front of the screen. Their entry order was 5-10 pips away, and they missed the trade. And you know what's even worse? On exits, people get so attached to their target that maybe there's another 20 pips or so into their target, and they don't even move their stop. So they're looking to make 20, and they're still risking 60 to get that extra 20. So
it makes no sense. Yeah. Yes.
Right. So that's my lesson today.
So for me, being liquid or illiquid, I mean, up to an extent, of course. I don't want to be in a market that would make a huge gap. I mean, this is one of the reasons I wouldn't be buying penny stocks. I wouldn't want to wake up in the morning and find out there is a huge gap for a negligible reason or whatever else. But palladium is a marketable good that is actually used a lot in the industry. And if you even see at the chart itself shows you that it's not something like very liquid. I mean, yeah, okay, you're not gonna find spread, let's say, equivalent to what you would expect in Euro USD. I mean, there's no question about it. But still, I don't really care so much. I mean,
it's a good sign now that I think about it. The metals are flying with the sell-off in the S&P.
And palladium is selling off, exactly.
Yeah, I mean, that to me is a market message in itself, which...
Exactly. Imagine what's going to happen if the dollar rebounds and strengthens.
Yeah. That should give you conviction to press.
Exactly. Okay. So the levels I'm now looking at is this previous bottom, because if we break below it, it's around 771. If we break below it, it's the first time that we're going to actually register a lower low after a very long time, after October 2016. Then I'm monitoring this trend line. So if I see any big reaction from that, I might book like half profits or whatever. And then below that, I'm monitoring this trend line. So I have levels to watch. But for the time being, I'm pretty happy that from the moment I entered the position, I was almost never out of the money for more than a few minutes. You know what I mean? And that's
I love phase. Can I tell you something, Steve? Every day I look forward to, bantering with you and sharing ideas with you and Blake, and when Nick is around and Greg. I'm telling you, it's the most fun I've had in a collaborative environment in my career. I mean, and then you have the community, all these guys out here that are pros. People aren't here for education. A lot of people here, they do this. This is how they feed their families. It's not a hobby. So that when we're getting shares from the community, their livelihood's on the line. It's not just, wouldn't it be cool if pound Aussie sold off 200 pips? No, they have money on the line. And this combination of our team and the community is the strongest combination. Oh, and yeah, I was going to ask you about NASDAQ.
I'm also now short NASDAQ.
Okay.
I mean, this is the CFD. I'm actually short the CFD from almost 20 handles above here. I had an order if we had the plans below the lows here, which is at 5,685. Yeah. I had an order to go short if we saw a plans, and I actually got triggered. So I'm now 12 handles in the money, to be exact. and my stop loss is going to be very, very tight because I recognize this is a very bullish market. So my stop loss is just above the highs.
So NASDAQ actually, well, it didn't confirm the high, but it had the highest RSI reading compared to the Dow and S&P. It's definitely been the, the moonshot superstar.
For sure.
Compared to Russell and the Dow and the S&Ps. This has been it. So
for sure. Look at this.
Yeah. Parabolic. So I think you get a pullback at least to your blue dotted line channel down there, Steve. That's what Mr. Pinkert thinks.
Sorry, let me do it properly. It's
on my lips.
What is it? It's 26% higher from the election's low. 26% higher. This is a performance you would expect at the middle of a bull market to see it for a whole year during a great year, you know what I mean?
Yeah.
And we've had that since November. I mean, this move is parabolic, but it's not only that, it's that I can clearly count 5 waves up, very clearly. It's 1, 2, 3, A, B, C, 4, 5. The actual perfect target of the 5th wave, I mean the ideal, because that's just a guideline, was 5,685.
So it surpassed it by what, 40 points?
By just a little bit, and we initially actually got a little rejection from there. So I was optimistic. I was waiting to see what would happen there. I almost pressed pulled the trigger, but I was lucky because if we saw that second day close lower, I would go short. But we actually pulled back that same day, and when I saw this candle, which was a pin bar, I was like, no, this market is not ready yet. You know what I mean?
Nice look. So, it's even possible over the next several months we get that mean reversion to your 200-day down there.
Perhaps, but I'll tell you something. In my opinion, and I want to be very clear with our friends here. In my opinion, this trade I took here is a trade that has 20% chances of working. And I'm fine with that because my risk reward is multiple times that. I mean, I'm risking like 45 handles, hoping to make at least a couple of hundred. I mean, I want to at least see a retest of this channel.
Yeah.
At least. So I don't care. I can get stopped out. I got that already twice, trying to short DAX. It's going to work the 4th, the 5th time, and I'm going to make all that. I mean, those are the trades that you don't take to ride a trend. You take them because you see some chances of a big reversal, and when that happens, you get paid multiple times that.
I want to note the time of month. I talked about it last week. I thought that we would peak this week, and I learned from a guy, I used to get his letter many years ago, Eric Haydick, that looked for mid-month reversals. Here we are, smack dab in the middle of the month. Kind of like on a monthly basis, it's kind of like a turnaround Tuesday event, but mid-month. So this actually, if we continue down, I'd be interested if you look at your monthly chart where we closed last month, and that could be a possible target.
Before we do that, there is a friend asking what is this vertical red line. He wasn't obviously on the and he's not the only one for sure. He wasn't on the webinar when I explained why I actually drew this line, and it's very interesting actually. I drew this line to give me a very rough guideline. Now I'm going to speak a little bit mathematically, and then I'm going to explain in simple terms for people that are not so acquainted with mathematics. This line, in a sense, shows to me what is the sign of the second derivative here of the ascent. I mean the following. It shows me something that is very interesting. This is the distance to begin with. This is the distance between the 200 simple moving average, daily simple moving average, since this is a daily chart, and the 50. So I went back out of curiosity. I thought of that like a couple of weeks ago because I was seeing at the chart and I was like, shit, this is parabolic, and this is parabolic in a market that's been bullish for so long. This is such a mature bull market, and it's going even more parabolic than it seemed to be, you know, previously. So I went back and checked, and indeed, during this whole period for years, and all this bull market, the distance between the 50 and the 200 EMA was never so large. So by comparing the distance between a faster moving average and the slow moving average, we see that the rate of ascent is actually steeper for at least a period of time than it was during this whole period. And no, this is a huge red signal to me. I mean, this is a serious warning sign. That's the distance red line you see me having drawn here. Ron was asking that actually.
Yeah. So if you can just pull up what Jess in the question panel put a palladium chart. He said that he thought it might interest you because he's in the trade too. And you know, Jess has traded with me in a room for, I don't know, about 4 years, and his supply demand work is top drawer. So you could see where you got short was right into a supply zone.
Yep. And you know, I also have the ascending wedge, which I was monitoring. Yeah, I totally agree with him.
What are you looking for, Jess, on the downside? Back down to the green, whatever that green squiggly line
perhaps
is.
he's looking at the blue line as well, which is what I'm guessing it's some kind of an average. Is it yeah. Is it an exponential? Is it a simple one? I don't know what it is. But it's definitely, I mean, the way it moves, it's some kind of a moving average.
Okay. Thank you, Jess. So here's a big question today, Steve. Very nice analysis on NASDAQ, and you've been stalking this for, I don't know, about a month now. Yeah. And so with this going on and that potential to the downside in NASDAQ, what are you thinking in US dollar yen now?
I'll tell you. I was looking.
I knew you would.
I was looking to buy a move. Hopefully, you see where I have drawn it, where we had the confluence of the 38.2, this zone that has acted as support resistance 1, 2, 3, 4, 5 times until we actually broke it.
Yeah. And now we're underneath it.
And the channel. Yeah. I don't mind so much of the fact that we're underneath it. I mind the fact that I wanted to see a gradual correction lower. You know what I mean? Yeah. Like a grind lower. I mean, that's what, so, you know, when you have a plan.
It's not the price, it's also how it gets there.
Exactly.
And, you know, and that's important to me. That's important to me too, because, you know, when things grind, I have more of a chance for divergences to set up. When they blow off or crash, that doesn't happen.
Yeah, so I don't like the structure for the time being. I mean, the structure is not nice. It's also not nice the fact that we're currently, it's not only the NASDAQ that we had a look at, but let's have a look at the S&P.
What a great call by Blake on the Nikkei yesterday.
Indeed. S&P is testing again this very important minor support. It's, on one sense, it's minor, but it's all we have, and it's something that we tested here as a resistance. We tested here as a resistance for 1 day, and then multiple times. I can count 1, 2, 3, 4, 5. Today is the 6th time we're testing in SPX this zone, which is roughly at 2,376 to 80, let's say. Mm-hmm. Obviously, we have a lot ahead of us for the day. Obviously, if we see again a strong rebound and the pin bar, let's say, that's again a sign that, you know, buying interest down there is extremely strong. And that will be another sign that the bears might be taking efforts, but the longer they fail to penetrate this, the likelier they are to just quit by saying, oh, you know, I'm not going to say the word, you know what I want to say. You know, let it be. Obviously, you know, we cannot do this. Let them drive the index higher, and we take it from there.
No, Sir
but-
Pinkert says 2264.
2364.
22. 22.
2264. Let me see.
Yeah, right there, you're 38%
Oh,
level.
yeah,
and
might
that
be.
2280.
We also have a zone just above it, as you see here,
Yeah.
a minor support zone at 2,275.
Yeah.
We have just below the number you gave, we have the 200 DMA, but we have a lot to go until there. You know, I take it one step at a time. First step, I want to see a daily close below,
Under 2380.
this little area. Yes. For example, let's see a daily close at 2,375. That's going to be a very good start, because it's
Okay.
going to start getting bulls nervous. I mean, they're going to start saying, okay, this was a magnificent ride. You know, this looks like it might break lower. Isn't this a good opportunity to book some? And that's going to accelerate the move lower. But for the time being, and because the large pile of money do not trade intraday so much, you know, they're going to wait to see where the index closes at night, and then talk about it, and you know, and take a decision. So for me, there is no technical damage yet until we at least see a daily close below it. But we're definitely making a good effort to get there.
Most corrections that take place in the stock market, I learned this too. I've learned so many things over the years, are about 7 weeks in duration. So if we peak this week, or you could take it from last week's high, we're talking about there's going to be some pressure on the bulls into July. July would be, maybe into the 4th of July. So just something that I've learned, that you could get 7 weeks. Also, my 2 close reversal on a weekly, I know it's only Wednesday. Is today Wednesday?
Yes.
Okay, so there's a couple days left, but we have a potential weekly 2-week reversal on the S&Ps, and we haven't had one of those since the last high back in March. So there are some things that are happening.
Indeed, and we've had divergences as well on the way.
Yeah, but the last correction happened from a confirmed high.
For example, this is a divergence, huh? DJI never.
No, because it never made a new high.
Exactly, never made a new high. This is something I was monitoring, because these kind of divergences can often mean a lot, and we never made a new high.
I do remember last week. You see that little reversal pin bar that we had last week at your green moving average?
Here,
and
yes.
My comment was, underneath that low, the market's in trouble. So here we are. Here we are.
And you're right. It doesn't look good. It doesn't look good at all in combination with the other indexes. I mean, think about it. Nasdaq was still going on like nothing had happened. Right. S&P was struggling with the previous highs, and Dow never even tested them. Huh? I mean, that says a lot.
It does. How about the Russell?
And you remember...
Okay, I'm glad you pulled it up. You know what you have there? If that gap remains unfilled, which I think there's a chance. I was talking about this with Blake. And most FX traders don't know about this, because we don't have a lot of gaps in FX, because we trade, 24/6. That's an island bottom. And the bonds topped on an island top last year.
You're absolutely right.
We gapped down, and I know you and Stel were looking for a reason. If this gap holds, this gap up, you have a very rare formation called an island bottom. That all that action to the gap down, people are short down there and trapped. Okay.
For people that don't know what he means this area. This area came from a gap lower, and now we left it again. We abandoned it with another gap higher.
Yeah.
So this is what Dale is talking about.
Yeah, everyone's stuck on an island. It's like the TV show Lost.
Exactly.
So they're all...
And you remember, Dale, we talked about it here in the webinar. I actually even tweeted about it. I think it was here. It was at 9.7. I remember that, but I don't remember if it was the 8th of May or the 9th of May. It's because both days we were actually testing that lows. I think it was on the 8th. And even I remember I even tweeted something like, you know, that we are at, I don't remember even how many years I went back to check, because you remember we saw it,
Yeah.
and we said that I hadn't found, I found only 2 incidents of such low readings within 30-something years. So I even tweeted about it, and I said, what can go wrong? You know, and you know, what can go wrong is obviously,
there you go.
Yeah, of course, let's be honest, there is no technical damage yet here.
No.
Even, I mean, we got a jump higher, which was expected. I mean, what did you expect, to go lower from 9.7? I mean, that was pure insanity. The question is, will we have follow through? Because with so many market participants being only buyers, central banks, etc., 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 etc. I mean, Stelio, what's the percentage of Apple stock that S&P owns at the moment?
Of Apple, was it 20% or something huge?
Hey,
Yeah.
Kimster Reka already has a 40 pip lead on his sale in pound Aussie. Nice work, Kimster. So Armand's there too. Armand's saying the tornado is coming to get them in the island. Okay. All right, Tosin saying, okay. Anyway, it's a potential island. I give it at least a 50-50 chance that the gap is going to hold, and we need to get through your blue line. And then there's nothing there till your big blue down channel that comes in around the old high.
Exactly.
Steve, by the way,
yes,
S&P holds 19% of Apple stock.
S&P, sorry, Stelio, you're kind of low on volume. Yeah?
Sorry, the S&P is holding about 19% of Apple stock.
Yeah.
It's so concentrated. It's like, you know, almost all the market cap and gains, it's concentrated in Apple and Amazon and Netflix. And
it's not only that though. My point here, Dale, is the following. We don't anymore have, let's call it normal stock markets. When you see central banks acting like humongous funds, there is a relentless bid underneath, you know what I mean?
Yes.
And I'm wondering, what the hell are those guys going to do when the shit hits the fence? You know what I mean? Are they actually going to step in with bigger strength, or they're going to try to be nimble at that point and say, okay, we've made a lot of profits in the past, we have to incur some losses as well? I don't know. I mean, this is a whole
I think they'd be okay with a 7% correction, because they're actually, I think, a little concerned about valuations and another bubble. Even though they have made comments about valuations.
I think their comments show that they're a little concerned. I think that underneath the comments, I personally recognize a lot more than a little concern.
Yeah, a lot. Well, Paul Tudor Jones said that the Fed must be, you know, scared out of their mind. But yeah, so that's an interesting. This could end up being a pretty pivotal day. And you know, a lot of guys are saying, you know, this is just going to be a pullback to, you know, 2320 to 2280 in the S&Ps, and then we have a new high coming up, you know, towards 2500 or so. So
we might.
Yeah.
We might. I mean, you can't really make predictions with this market, because if you were to make educated predictions, having to do, I mean, taking into account fundamentals, etc., in my humble opinion, we should have never even reached current valuations.
Yeah, my account agrees with you.
Okay, so let's go through some other questions. You asked for it, and also a friend asked for it here at the very beginning. What have I done with USD CAD, right?
Yeah.
Okay. What I did with USD CAD is that I had an order to take 50% profits if we retested 136.20, and actually that happened automatically. So now I only have half my initial positions. I took profits around 150 pips profits on the rest, and the rest of my stop loss, as I said yesterday, is above this high. It's actually at 136.60. So if we penetrate that, that means that I'm taking profits to the other half of my position, and that's it. I don't like the fact that we never moved so fast. I don't like the fact that
we had a big oil rally, we had a weak dollar, and the most it could generate was, you know, a couple hundred pip decline. The krona was a better short.
Exactly. You remember how many days I said that?
Yeah.
That sometimes you go wrong. I should have shorted the USD NOK instead. I didn't. Stelios is short that, and kudos to him. We even have a pattern in play in ForexAnalytix for that. This yielded a much bigger move, but be careful. We're currently about to test the confluence of the 200 EMA.
Yeah, I'd be covering shorts here.
This ascending trend line and this area, which is the area around 840 that has provided support and resistance multiple times. So that means two things. One, you might get a bounce from here. It's quite likely that you're going to get a bounce from here. But two, if we even drop below this, people that are long are going to be very, very scared. And we might see a very fast acceleration of the move lower. So perhaps if you were riding this short, you want to partially take profits and look to rejoin at a rebound, let's say at 850 or something. Yeah. Or anyhow, keep monitoring the position so you don't give back, you know, a big amount of your profits. But this has been a very nice move so far. This is the, I think, sixth. Yes, this is the sixth black candle in a row. Obviously, this ascending wedge has broken. We even broke the channel. And this is the line in the sand. I mean, a break below here turns the bearish. So be careful.
Is it an Obama line in the sand or a Trump line in the sand? One is drawn with invisible ink, and the other one likes to cross the line all the time.
Yeah,
so
I'm not going to go in U.S. politics.
All right, I know. All right.
So that's it with it. Now, having to do with silver, since we started talking about positions.
You're hot, man. Vogel's in the zone. Yeah.
Needless to say, I'm a happy bear. Although in this case, I'm a happy bull.
Yeah.
Because my cost average is at 1630 something. So yeah. I'm now more than $50 in the money. I haven't taken any profits yet because I haven't seen any reason to do so yet. I was a little bit worried about this upper week, but you know, I wouldn't be giving up, you know, just by seeing, you know, a half a day's pullback.
Oh man, I told you they were going to squeeze the short so hard their eyeballs would pop out.
Yeah. So the next zone.
So you're going to get your 1720. And maybe 1740.
Listen, whatever the market brings, I'm going to be grateful for, right?
Okay.
I knew one
thing.
Good attitude.
Good attitude.
When I started going long, I knew one thing, that this move could not go indefinitely without seeing at least.
You know what, Steve, you just talked about USD NOK. There's a pattern in play. I know that a lot of people in here aren't subscribers, but since you covered the note, I just got a push alert. There's a pattern in play in the USD note. Why don't you show it? Sure. What the new pattern in play is. While I take a quick break, because Greg the Great, Michalowski, is going to be with us in about 10 minutes. I know a lot of people
I'm really looking forward to that interview. I have to tell you that.
I think it's funny that Blake and Greg only live 3 blocks away from each other.
Oh, what you got actually was that this was closed with a 1.96% theoretical profit. I'm saying that because I need to remind friends that our patterns in play are educational in nature, right? We pinpoint patterns.
So it was a winner.
Yeah, made 2%. Exactly. Yes.
Okay, and while you're here on this page, you want to show the cool update you made that you showed during our meeting, and during that time, I'll take a break.
Oh,
Some of the
we haven't pushed it yet. Yes, but I'm going to show it to people because
Okay.
of this.
Okay.
Of course, I
And I'll be back. And I'll be back in 5, buddy. Thank you for backing me up today.
Sure thing, mate.
I love collaborating with you, man.
Me too.
I'll be back.
This is the update we're going to be pushing. This is the test server, actually. This is the update we're going to be pushing probably even today. We got a new range, days range indicator that shows you the low of the day, the high of the day, and the position the market is currently at in accordance to the low and the high of the day. So that's it about this as well. So let's go back to Mr. Market. Thank you. Actually, it's multiple screensavers. Each screen has its own. It's a very nice theme. Let's talk about Euro USD because I know a lot of you were talking about it. And actually, since Friday in the analysis, I wrote the following, that in my opinion, I repeated it yesterday as well, I think the day before that as well. In my opinion, the market was attracted to the confluence of multiple resistances we had in this area. It was the 61.8 at 111.30 almost. It was the 161.8, the 161.8 extension of this move. And it was also this horizontal zone, which we actually tested today before pulling back. So I was bullish the Euro USD since we saw this day on Friday, and this way we emphatically held the gap higher and the 200 EMA once again. But I currently maintain now a neutral bias since we hit this confluence of resistances. I mean, for no reason I would be long at current levels because I don't see the risk reward being there. In fact, I think this is a good area to see some kind of a pullback. Now, we'll have to see how that evolves to talk about the structure and see if it looks impulsive or if it looks corrective or whatever. I know that my target was hit. Let me be clear. I was not long, but I believed it's going to go there. I had other trades I preferred more. I wasn't involved with this trade. From purely an analytical standpoint, I said that I think it's going to go there. It went here. So what happens from here? If I had to bet, a pullback is more likely than straight up continuation. If we see a straight up continuation from here, that's going to be very, very bad news. Very, very bad news for the dollar bulls, actually. I mean, this is going to show that the dollar is even weaker than we expected it to be. So, and the most important thing, USD CHF trapped people. Actually, if I cared to be involved with those pairs, I would have been trapped as well, but I wasn't because I prefer to stay away from those pairs. We had a descending line. I deleted it yesterday during the webinar. We had a descending line here and looked like
I love false breakouts.
Yes, and we look like,
aren't they the best signals, the false breakouts?
Yes, they are. And look at this. We had a break above it, and people could have said easily, okay, that's it. It's turning around. But good thing that the second validation you needed was at least a higher high. We didn't get that because we got rejected from the same area here. The problem is the following. Look what kind of a trend line we're currently breaking. We're talking about a trend line that goes back to 2011. Look at this. So if this does not prove to be a false break lower, things are very, very, very bad for the bulls. I mean, I'm gonna expect to see what kind of a close we're gonna have today, but for the time being, it doesn't look good. Doesn't look good at all, actually, because this is a very, very important trend line. This one. Let me make it blue so I can actually distinguish it from the other one above it. This one, the blue one. So USD CHF. This looks like a very, very serious potential breakdown. I was saying before, Dale, as you were away, that we actually hit, if you remember, the zone in Euro USD I was talking about. You remember that I said that this acts like a magnet, and I expected it to be tested. We
Yeah.
did test it. So I just said that, listen, what happens from here, I can't tell you. Perhaps a pullback.
Yes,
And if we
I'm in
penetrate
that
above
camp.
it, it's going to be very, very bearish for the dollar, because it's going to show that it's even weaker than we actually expected.
Also, if that happens, Steve, that negates some of the bullish dollar counts that 97.50 had to hold. Okay.
Yeah.
So
Actually, let's
we're
have
right
a look
there.
at the DXY since you mentioned it. Look at this.
Keeps
We even
trying to gap.
We
Yeah.
even gapped lower. I mean,
Yeah.
what does this tell you? You remember we had the conversation here this day that we retested this channel, and
Yeah.
and we said, listen, we have a doji, we're testing this channel. You know, this thing looks dangerous. Then we had the next day, and we were like, listen, this is an evening star formation, and look what happened. I mean, the market is turning outright bearish. I mean, there is not even an attempt to buy on these dips anymore. There's not even an attempt. I mean, this is very, very worrying if you are a
And Blake made the comment on the bonds. Are the bonds making hay on the sell-off in the S&Ps?
I'll show you.
They put in
Actually,
kind of a strange day yesterday. They were sharply higher, and then they left a pretty good wick. There's a
actually,
retainer.
Blake talked about the bonds.
Yeah, beautiful.
During the video we had, the next week's preview video that we usually film on Saturdays or Sundays.
Yeah.
And it happened that this weekend I did the analysis on that. So he actually had this exact chart. He used my chart because, you know, we divide, we do half each, and we usually exchange per day. So that day it happened that it was my chart. So people that are in ForexAnalytix, they saw this exact wedge I'm showing you here.
Yeah. Yeah.
And this exact zone of resistance you're seeing here. And I have to give him that. Blake was actually looking at the potential of a rebound before we even penetrated this zone. And
he saw it at the bottom of the wedge. He saw the wedge forming down there.
Yes, exactly.
Then he showed
they also need to tell you that Blake, and I'm friends with Blake for years now, and knowing his ability and his market insights, I never doubt his intuition, because very often you see Blake saying things like, oh, he turned bearish the dollar when the dollar was looking, I don't want to BS you. I don't want to tell you he said it here or he said it here, because I don't remember the exact date, but I remember that the dollar, I think it was somewhere here, but the dollar looked extremely strong still. I mean, extremely strong. And he said, "Oh, I've been bullish the dollar for a long time," and actually, Blake was bullish the dollar for a very, very long time, but I'm now outright bearish. And I was looking at the chart, and I was like, "What the hell is he seeing? He's bearish the dollar." I mean, I see nothing on the chart that says be bearish the dollar. But you know something, being friends with him for many years and seeing him do intuition calls like that, and being right way more often than wrong, you know, I had it in the back of my mind, like, okay, Blake turned bearish the dollar. I have no freaking clue why, but you know, I don't want to ignore that.
Yeah.
And then, you know, some signs started showing that it's actually turning. So this guy has some like a sixth sense on big market turns. I have to tell you that. And I mean it. I'm not saying that because he's my partner. I'm not saying that because he's my friend. I'm saying it because I've seen it in action multiple times.
Well, what a great segue. Let's bring Blake's neighbor, who lives 3 blocks away from him, according to Blake. I'm going to make Greg the presenter.
Perfect. I'm really looking. I've never spoken with Greg before, but you know, I've been following him. I know from Blake as well that, you know, he's great in what he does, and I'm looking forward to.
Yeah, he's part of that great team with Adam Button at Forex Live. I'm really looking forward to this conversation. So, Greg, I'm making you the presenter now, and I'm.
By the way, sorry for any questions we didn't get into. We'll do it tomorrow, guys. So be here tomorrow. We'll go through whatever we didn't cover today.
Okay, LaShawn Turner just joined. Be sure to tell Greg that Blake is lurking outside his house. Hi, Greg.
Hey, how you doing?
Greg, it is so great to talk to you, my friend. It's been a real long time, and you know, I'll never forget when I was in some dark hours. You probably don't know it, but what a lift, and you gave me emotionally and spiritually by your caring nature about what I was going through, and I'll never forget it. So
Well,
I want to thank you for that, buddy.
You're always welcome. You know, we put our faith in where we put our faith, and I know you and I are on the same. You know, well,
Yeah,
that's the way it goes. But you know, I'm glad to be here with you, and
yeah, I'm just glad to be here.
Great opportunity.
I'm just glad to be here. How about that, Greg?
Yeah, same here. Same here.
Yeah. So, you know, thanks so much for taking time out of the day. And, you know, you have a lot of fans in here, Greg. And what a great day for you to come in with all this action that we're getting. And looks like you had the same channel drawn in the yen. And what do? Do you consider this a false breakout out of a downtrend? And now that we're back underneath this downtrend, I know that people are probably asking you, what do you do with the yen? A lot of people were real bullish after that breakout.
Right.
What's your view now?
Well, you know, first off, Dale, yeah, you have to listen to the market. I've been in this you know, like you, in the market long enough to know that I can't push the market around. Hold on one second. I'm going to turn something off here that's in my ear, if I could. There we go. All right. You know, that we as traders can't. We just have to listen to the market. We can't push the market one. I've never been able to move the market one pip with anything that I do. You know, buy or sell. So
I tried. I
teach we've all tried.
I teach the cursor technique, where you put your cursor over the last pin bar and you move it in the direction you want the market to go.
Oh, there's a lot of those types of things that I've tried through the years. You know, that the market's watching what I do and it goes the other way. So I'll just do a small amount and they'll react to that. But you're absolutely right. You know, we can't. We can't do it. We can't move the market one pip, so we have to listen to the market. So, you know, getting to your question here on the dollar yen, this, do you see my cursor? I guess.
Yes, I do.
Yeah. Okay. So we're circling around the break of the 100-day moving average here. You know, you have to listen to that. You have to listen to the break of this trend line. You have to listen to the break of the 100-day moving average.
Greg, sorry to interrupt. If you want, I just want to help you here.
Okay.
You see that there are also some drawing tools. I mean, besides using your cursor, there is in the panel on the top left below where you can mute your microphone, etc. There is a little panel that has drawing tools. Yes.
You got it. Yeah.
Okay. How do I erase that? Do I just?
You right click and you get several options. Among them is an eraser or to erase all drawings from there.
Okay, I got it.
See, you didn't know you were going to get a tutorial in a GoToMeeting room, but anyway, so it's true. So that's your style. I remember that. You listen to market messages.
I do, and you know, you have to respect the market. You have to respect what it says and how it reacts. And so so that's what I look to do. So you know, what we do now is we're below the 100-day moving average. We went below that in the early session of last night off of that email right here, and we started to march down through other levels here as well. This is an hourly chart here. I have the overlay of the 100-day moving average, and you can see it, Dale. I love this chart because you can it overlays these moving averages on the hourly chart, and so it's so
cool.
Visual, and you know, look back here. You know, back here. I know I'm not using the drawing tool here, but
it's okay. It's okay. I see your cursor.
Yeah, back here, how the market moved above the 100-day moving average, and what did it do right here, right before it started to move higher. It came back, tested that, moved to the upside, and again down here in yesterday's trading, we had this opportunities here, just little short-term trading opportunities where the market came in and supported against the 100-day moving average. That helps this, you know. That helps, you know, these tests here help this break here, given traders more confidence in the moves and on the breaks. So even if you didn't hear the Comey comments or, you know, see the headline, like you know, we have news services that we're able to see these headlines come out, you know, and Forex Live is frantically typing in what Comey's you know, said or what he wrote in the memo and stuff like that. You have this stuff as your clue, and the price action is not going to lie. It tells you a lot of things, and all you have to do is listen to what it has to say.
Yeah, I mean, let's face it, price is a vote. It's a vote. It's a vote of people voting with their pocketbook. They're a buyer or a seller, and that's their vote.
Yeah, I like to say, who's in control? You know, who is showing their control? And buyers were actually showing control here. And traders anticipated the support against the 100-day moving average. But if we're truly going to listen to the market, we have to, you know, take our shots against that 100-day moving average. Okay, we're going to find support. We're going to move higher, and then maybe you sell against the 200-hour moving average up here, with risk defined against that 200-hour moving average. You know, but when it goes below here, and the vote is in, and the votes are being cast, and you know, somewhere out there in newsland over there is some memo that Comey wrote that you know, that you know, brings question into all the Trump stuff. That's the story, but this is what we as traders need to focus on.
You know, that's a key pearl that you say. You know, the pearl is the 100-day was your contingency for being in the trade if you wanted to be long against it. Once it's negated, the whole reason for you being in the trade is no longer there. So it's real important to identify the reason why you're taking a trade, because then if the reason is negated, you know it's time to get out of the way. If you haven't defined a reason for doing something, and, you know, sometimes it's better to have more than one thing, like have confluence, you know, between lines and moving averages and fibs. But definitely you have to identify the rationale that's getting you, that makes you compelled to assume the risk.
Absolutely. And a lot of times people want to have that reason that you speak of to be some, you know, some story, okay? For me, and I know it's for me, I could give a darn about the story, okay? The fundamental story. I just want to see this, you know? I want to see this, and I store this away, okay? There was something that caused the market to break above here in you know, the early Asian session, come down here to the line and move higher. And guess what? Everyone in the world can see that, okay? Not just me, everybody, okay? They see this, and the smart guys, you know, you mentioned Blake. Blake, you know, his little nuances and his way to, you know, he has this intuition, okay? You never doubt his intuition, was said right before I came on, and you wonder, what does he see? Well, maybe he just sees this thing, you know, and he sees, I don't know, the failure up here above this this trend line, and he makes a judgment that, you know, I'm just going to sell highs up here. I don't know, you know, but we as traders have to sort of anticipate these ideas. But the most important thing, though, is defining your risk. And so when I talk about and we as traders talk about this 100-day moving average. It's no secret it's there, but the most important thing that it does is it defines and limits your risk. If you define and limit your risk, then what are you risking on even buying here against this low right here? You're risking a break below that line right here. Right. So you're risking this amount. And people say, well, I can't pick bottoms, I can't pick tops, I can't, Well, someone picked the top right here twice against this old high right here, and they probably had a stop right here, against this old trend line, okay, or right here, and that's not a lot of risk, okay. And sometimes you pick it like like the best fielding shortstop out there in Major League Baseball. They can pick anything, they have this this ability to just pick those areas. Blake,
they see it.
Pick that spot in the dollar, and say, now I'm bearish the dollar, and oftentimes is little clues like this,
Yeah, look at
little
that.
Clues like that.
Is that the 200 or the green?
That's the 100. That's 100-hour moving average.
Okay. Right? And those are the two that you use, is the 100 and the 2.
The 100 and the 2, that's it. I don't try to clog my charts with a lot of stuff. 3 tools, moving averages, trend lines, Fibonacci retracements. They all work like a symphony with only 3 instruments. But there are
like my band, The Hands of Time. You ever hear The Hands of Time? Well, anyway, you probably didn't because it was junior high rock.
I'm gonna go on iTunes.
Yeah, Google it.
Okay. Okay.
Then that's before I turned into Elvis Pinkert. But
goodness,
anyway, Greg. So that's an interesting thing as well, is that you work with 2 moving averages, and before you got here, that's what someone in the community said, is they knew your work was the 100 and the 200 and your channel line. So so we have the yen here. What else is grabbing your attention? The big break in the dollar, the big rally in euro. It's breaching resistance right now. I'm getting some updates here. Does the dollar look, there were so many dollar bulls here. Do you think that it's over, or this is just a big correction in the dollar? And I know you're not a big guy on forecasting, but it's sure hard to want to be short this euro, isn't it?
Yes and no. Yes and no. I know. You can sit there and say, well, you have to be. It's hard to be short the dollar because the Fed's going to do this, and raise rates and things are, and then you throw in the whole, TRUMP into the whole equation, and you get that. Well, maybe the dollar can go lower if the market, starts to think about the unraveling of what goes on. And let's,
well, politically, you're talking about the possibility of a constitutional crisis and all that.
I mean, it, and not necessarily that honestly. It's the Trump agenda, getting rid of regulations, getting fixing the healthcare situation, more spending on infrastructure, businesses feeling more, confident and all that other stuff that goes along with all the, taxes, tax reform. Jack Welch was on what he and other business leaders want is that the tax on corporate profits to be lowered, to have that free, perhaps
and the repatriation.
Yeah. All of that is all cooked into the into a quote unquote strong dollar policy, and the Fed says, oh, we're not paying attention to that,
but he is getting what he wanted. He did want a weaker dollar. I mean, there'd be headlines, tweets that drove the dollar down from his inauguration. So he's getting what he wants. I would say this to him: be careful what you wish for.
Right, because there's the other thing like the stock market reaction and stuff. There's a lot of balls in the air. Dale, and that kind of pushes me back toward listening to what the market says, because the market is the ultimate vote and the voice in how things move. I'm sorry, but was it Stellianos that was on?
Yeah. Yes.
Early. Okay. Yeah. Nice to meet you. I hope I'm saying that wrong.
Well, we have two Stellianos. We have two of them. So Stellianos Volgi, which is also short for his last name, takes Steve.
Right.
And the other Stelios sticks with his
Greek. About me because I spoke. Yes, we both have the same name, but everybody calls me Steve to be.
Steve is Americanized now.
Okay, Steve.
Yeah. So
he eats hot dogs instead of euros now. So yeah.
Well, good to speak with you too. But as far as the euro goes, he had the same 61.8% retracement up there at the highs here, and it was holding there. It came right up to that level, right through here, the hourly chart again. And the hope is, and we as traders do have hope. Okay, don't let it fool you. But the hope is that the 28 level holds and the market comes down and starts to correct lower. But when we start to move back up above it, that's where the risk is defined, risk is limited, and we start to move higher. So we have to, I think we have to respect the because of what we're seeing in some of the technicals here, especially things like the yen and the euro marching higher. We have to respect that. I mean, for the euro here, here is my this trend line here that cut across here. We went above it earlier this month, and then this was on an opening, a weekend opening. It's on May 8th. Opened up higher and then moved straight down. And
the big day on that chart, Greg, was the election night where the euro started off higher and failed.
Right.
To go back, and it looks like we're headed back towards a possibility of that being retested. So it's interesting how far away the stock market is compared to the euro retesting the same zone before the election, because that would be 2070 in the S&Ps if the euro gets up to that spike high up there.
2070,
yeah, and that's where we were November 8th.
And we're at 2370. So, yeah, I mean, you can bring up stock market charts as well as and well, hold on, let me see if I can. I did a picture.
And the bonds are making progress back toward those levels too. That would be about 130, 128 in the TLT. So some financial markets have taken away the whole Trump thing. A lot of stocks have, the Trump trade. A lot of people bought steel stocks, and they, I remember Dennis Gardner said, I like U.S. Steel because I understand it. Anything I could drop on my foot and it hurts. And
he didn't buy it in yen terms, though, did he? Or
he's not short of long gold of yen.
Right.
Long of gold of yen. But I think it's interesting that a lot of these markets are close to recapturing everything that was lost on November 9th. Except the stock market.
Except those that S&Ps and NASDAQs and all that other stuff.
Yeah.
I saw, what was it yesterday? They had like 10% of the S&P is like Facebook and Apple and Microsoft.
4 or 5 stocks.
Yeah. So
Yeah, high concentration, Amazon, all of those.
Yeah,
You know,
yeah.
I'd like to give you some time to talk about what you and Adam and the other people at Forex Live do. I know that you're a great fundamental information source. So, you know, both you and Adam have been so kind to come and join me in my new venture here with the team at ForexAnalytix. And I know you and Adam respect both of you as people and as analyst traders. So if you like, you know, you could show us a few things that you guys do and how you edify your community.
Right. Well, our bread and butter is of course our website forexlive.com, and you know, we look to, you know, provide you know, a trader's perspective, if you will, to the action that's going on, from, you know, analysis of the economic data that comes out to, you know, you'll see my stuff just you know, with Forex technical analysis.
And you know, it makes me think, as I see Adam's mug up here on the screen, that you are like 99% technical, and Adam is very fundamental. You know, I mean, he loves news events. That's when he really gets, you know, puts his the pedal to the metal. What a great combination you guys are for partners.
Well, it is, and purposely so. So excuse me. Although I don't know how to spell analysis up here, so that, you know, that comes with the
We'll send you a spell check for your site, but
with the quickness that we try to get our posts up and such. So
all right. So you also have social trading. You guys have a room where you do you have a trading room? What's social trading like at Forex Live?
You know, it's not where we necessarily want it to be, but it's getting there. You know, and part of it is, you know, just a time constraint from what we're trying to do here. This is our bread and butter right through here, is to get as much information out as we possibly can on the market, on specific trading ideas or levels, and levels that are key where risk can be defined, risk can be limited. I use that phrase all the time in everything that I write. So what you're gonna, so, you know, at down the road, I mean, we hope that can get bigger and better, but it takes, you know, you can't be two places at one time, can you? So you have to,
you need a big team to handle everything.
And so, you know, we hope to grow in the future, and you know, the thing about that is let's say that you know, we open up a technical analysis room, and that's where I'm going to be located. Well, if we were to do that, it might come under a pay per, you know, to get in there type of thing. I'm not saying that that's going to be the case, but you know, but it takes me away from this, you know, where we love to and we work to satisfy all our customers out there and stuff.
Okay, and there was big news for your company, wasn't it, with finance magnets?
Yeah, we part of their overall umbrella. So that's good news for Forex Live, and takes a lot of you know, you talk about manpower and stuff like that. It takes a lot of that.
They're like your marketing,
right? The stuff behind the scenes out of our hands that allows us to spend more time here, at least, you know, and a lot of that stuff happens after the close, after our shifts are over, and so it's a great relief. We as traders know that you know, we can't go pedal the metal 24 hours a day. I know there's some people out there who do, but God bless you. I'm too old for that.
Yeah,
so,
the young guns.
Right. Yeah. So we try to keep it's a great fit. We're very proud and happy to be part of their part of the team.
Well, it was great hearing your voice again, Greg. And
it's always too short. Have me back again. I'd be happy to come and support.
Yeah, I look at you and Adam as regulars, okay? So
Okay.
we're gonna, continue this relationship, and again, I consider you a friend.
Yeah,
And it was great having a conversation with Mr. 100, 200 moving average, and talking about taking the market message. There were some pearls in this interview, and I wish you and your family and the Forex Live family nothing but success and blessings and pips to rain down on you and everyone you're in touch with.
Same to you. And
hey, Greg.
Yes.
There's your neighbor. Your neighbor's here.
Hey, I just wanted to. I've been listening in the whole time. I didn't want to just barge in at any time.
Someone said you were lurking outside his window, Blake.
I was
in the community.
I happened to be just down there trying to catch a ride to my kid's school. I just wanted to say, great to hear your voice. I can't wait for the next time that we get to have a beer. We should do that relatively soon.
Same place, same time.
That the same bat channel as I like to do it. Yeah, that would be great. But I just want to say, you guys do such great things, Greg. I love what you and Adam and the rest of the team at Forex Live do. You guys are really the standout from the crowd. For what you guys do for the Forex community, and I applaud you for it. I think it's awesome, and we just try very hard at ForexAnalytix to follow in your footsteps to help this community as well. So.
Yeah, we have the same admiration for you and your team, obviously, and it's great that you brought on Dale to do these shows, and that just says a lot about what you want to bring to your audience. So, and Blake's my hero. So
yeah. Well, the same back at you, Greg. Yeah. I really applaud you, and you're just a gem to listen to. And I actually had some guys when I was in I was up north in the Northeast that were like, hey, tell me a little bit about Greg Michalowski, and I had nothing but great things to say about you. So anyway, great to hear from you, and thanks for being here today, and I'm going to let you guys wrap it up.
All right, thanks, Blake.
See you soon. All right, thank you, Blake. Thank you, Greg. Thank you, Steve Volge. Thank you, Stelios. Thank you, Nicola Duke. Thank you, Greg Horvat. And thank you, Face Community, for your great looks today, for your attention. It's our mission every day to build up and edify traders, and I mean that every day. Hi, Brooks. How are you? So I'll see everyone tomorrow. We'll see if this pandemonium continues, and we'll see if we get some type of setup for a correction in Euro USD. Remember, most of all, don't just count your pips, count your blessings. You're driving around in your Lamborghini and your Mercedes-Benz, and you see someone with a cardboard sign, help them out. Okay, because we're all very blessed that we even have risk capital to risk. Some people have to make a decision between medicine and food. So keep that in mind. Sow good seeds and you'll reap the harvest. We reap what we sow. So thank you guys, and adios. See everyone tomorrow. I have a great guest tomorrow. I'm not going to tell you who it is, so you show up. And thank you for subscribing. A few guys said they subscribed today. Thank you for supporting our mission here at ForexAnalytix. Adios, my trading warrior brothers and sisters. See you tomorrow. See you, Luca.